John, the market's been pricing out another Fed cut this year over the last couple of weeks. We saw Mr. Evans from Chicago speaking in Frankfurt, Germany, a little bit earlier on, indicating that he's quite comfortable with where policy is now. Given the data that's coming from manufacturing, do you think the Fed should be comfortable with where we are now?
I think the Fed is very likely to cut again at the end of October as a result of this, and so long as the trade war situation remains as an overhang. I don't think it'll do over 25 bips, but I think it's highly likely that it will now.
John, this is quite the steep decline on one data point, albeit a very weak data point. But if you think about it, those talks are due to begin October 10th and 11th. If we don't get something very quickly, the next tranche goes into effect October 15th. We also have the EU Airbus tariffs, which might be coming soon. Government shutdown risk. Iowa caucuses even coming up. There's a lot to worry about. Could this be the beginning of a major sell-off?
I don't think it's the beginning of a major sell-off, but it's certainly a signal to the administration that the market isn't exactly happy with the way things are looking right now. And the administration has given, has essentially been very friendly to the markets for a long time. And most recently, it seems to be testing that friendship.
Does this put more pressure on the Fed to be more dovish, essentially to do the work of reversing what's obviously a trade impact?
I would say it certainly pushes back any thought of normalization at this point, but most likely a more dovish angle, at least for now. Though, Vonnie, we really do believe that if we can get a trade deal, all this goes 180 degrees in a different direction, and people will be worrying about when the Fed's going to raise again. This is an artificial overhang. Both the United States and China really should make a deal for their respective constituencies, as well as their trading partners. There was a global economic recovery in progress prior to March of 2018. And since then, that's been put in abeyance. And in the U.S., of course, we do have a sustainable economic recovery still, notwithstanding this ISM manufacturing number. But it is a situation where it's just time to make a deal and then work ahead from that. Something like the SALT agreement that was once related to armaments, the strategic arms limitation treaty with the Soviet Union that lasted was in a process over many administrations and ended when the Soviet Union failed in '89, as I recall.